S&P 500 has finally hit a 52-week high. Junk debt hit a 52-week high earlier than S&P 500. This is a bullish divergence, and I think this is good for the health of the stock market. We will give an example of a trade made by an actual client. It was an options trade, and he traded Travelers Insurance Companies, over 53% gain in just 3 days of trading. We will also look at dollar, which is pulling back currently, and now I wonder if this is a buying opportunity for dollar. At the same time, gold printed a giant rejection candlestick on both daily and weekly charts, and now I wonder if it's time to get out of gold. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, December 8th, 2023. As always, don't forget to hit the like button, subscribe to the channel, share this video, and subscribe to my alerts. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. There is also a link in the description of this video. If you're a subscriber, stay tuned. We will be covering a whole bunch of various securities. Notice that we have some Forex coverage, Euro versus US dollar, Japanese yen, and British pound, as well as crude oil and Bitcoin in the members only section this week. We will also cover various large cap stocks, for example, Caterpillar and Nike. AT&T is breaking out. We will look at that, and a whole bunch of various securities which are more speculative in nature. For example, Airbnb, very nice trade. Again, congratulations if you got in. Zoom Video, a blast from the past, is breaking out as well. We'll also look at Twilio, which is a very nice trade, and as well as several other ones. For example, let me see one second here. CleanSpark. All of those are very nice setups. Upwork, also a very nice setup. Very recently, congratulations if you got in. Let's get started. So let's start today with S&P 500. This is S&P 500 on daily time frame. Notice that today, indeed, we have hit a 52-week high. This is a new 52-week high. Today we hit a high of 4609.23. This is previously here in July. The high was at 4607. So we have exceeded the previous high by 2 points. In my mind, 52-week highs, all-time highs, any kind of high is basically a good thing, and it shows multiple things. It shows, number one, buying pressure. What is a buying pressure? Buying pressure just means that people want to buy or they own whatever it is that we're being traded. So just recently I heard that in Gaza, right now, there is a war going on, unfortunately, and within the strip, the Gaza Strip, the prices on wheat flour have gone up 10 times, so or sometimes even more. The reason for that is, of course, people need flour to make bread, and there is very little of it. So this is a supply and demand kind of thing. It's a terrible thing, but it does happen. In this case, we're looking at something called stock market or stocks. And if people are continuously want to own this security, even at the 52-week high, then this is showing a presence of buying pressure. People want to own it. So yes, it's overbought, sure. Yes, at 52-week highs, any indicator that you will look in, let's just look at RSI, Relative Strength Index. Yes, relative strength index is definitely overbought. You can kind of see it down here. So yes, it's above, whatever 70 mark. Does it mean it will pull back? Not necessarily. We can look at Bitcoin, for example, just very briefly, and I'll show you what overbought means. Yeah, it's overbought, but it also means strong. So look at this move here. I'm going to zoom in on Bitcoin. Right there. In October of this year, in October 20th through November 13th, this time period right here where I'm showing it. Yes, Bitcoin was consistently overbought, and yet it consistently moved higher. In fact, it's now at 52-week highs. Coincidentally, I own Bitcoin, so I'm just showing you that overbought does not mean we're about to pull back. Overbought means there is presence of there's interest in owning this particular security, and this, I think, is a good thing if we are stock market bulls. So 52-week highs for S&P 500 is, in my mind, a very good thing. We will continue to keep an open mind, to keep our mind open to possibility of better than expected outcomes. If you listen to the news, there is horrendous news sometimes. Yet stock market is doing its own thing. So if we listen to some great traders, there is a saying, file the news or ignore the news. And I kind of tend to agree with that. Let's just look at the chart. The chart is telling me to buy. So, for example, S&P 500 ETF SPY, I bought it myself where I'm hovering. I own SPY right now. I bought it on 24th of October. Why? Because it dropped below my blue line, my blue indicator line. This is a MasterChartsTrading.com price action indicators, which are available for TradingView. It dropped below my blue line and then it rallied above it. So this is actually all the information I really needed to make a decision of whether to buy or not to buy a security. And you see, like, I haven't even mentioned anything about expectations of recession, inflation, jobs reports, action by Federal Reserve, you name it. No, I only said one thing. Did we drop below the blue line? Yes. Did we close above it? Two things. Yes, and that's really all I needed to know. So again, my indicator lines are very powerful tools to help you, number one, visualize price action. Are we in an uptrend or on a downtrend? When we just closed above the blue line, we're definitely in an uptrend. When we get to gold, we'll see if we can ascertain or try to figure out when or if a reversal is about to take place. But this is more of an advanced technique. For basic trading, we just need to know, are we in an uptrend or are we in a downtrend? Okay, so in this case, S&P 500 is definitely in an uptrend. Let me show you what a downtrend looks like. Here's natural guess. Okay, downtrend looks like this. When we close below the red line and then continue making lower lows and lower highs, okay, and then we're coming up towards another potential rejection. But if you're a subscriber, we'll actually talk about natural guess in members only section. So looking at S&P 500, once again, all-time, or in this case 52-week highs, is a sign that we have strength. There is strength in the stock market. On a weekly time frame, we're approaching all-time highs, which is not that far away. So we will be on the lookout for more breakouts for stocks. High yield bonds or junk debt, ticker symbol JNK, as I have shown in the past. Junk debt correlates, or it does more or less the same thing as an S&P 500 in the vast majority of the time. Notice this correlation coefficient here below in yellow, and it currently, for example, it correlates, where I'm hovering, 85% of the time. So if S&P 500 goes up during the week and junk debt, high yield bonds go up during the week, that means they're doing the same thing. They're correlating. It doesn't show you how much they go up, but it shows you that they're doing the same thing. So high yield bonds this week actually hit the 52-week high before S&P 500, and this happened already on several occasions. 52-week highs were hit continuously for the past few weeks by high yield bonds. Good news, I think, because once again, because of the correlation, if the high yield bonds are moving higher before S&P 500, that sets up, in my mind, sets up a bullish divergence, so and a positive thing. So junk debt also hit 52-week highs. We're expecting stocks to continue higher. Will stocks eventually pull back? Absolutely. I 100% guarantee you that they will. When? Or rather, from which levels? That's the million-dollar question. What if we make new all-time highs, continue another 10% higher into all-time highs, and only then pull back? All right. Can that happen? Yeah, absolutely. So we need to look for, when we're buying something, we're buying a oversold security in a bigger uptrend. So if in this case S&P 500 was over, in an uptrend, and then it became oversold in late October here, that's when we want to be buying it. So oversold within a bigger uptrend. You probably don't want to be buying now at 52-week highs, although some people do, because once again, 52-week highs will lead usually to more 52-week highs because of what's called a short squeeze. So short squeeze happens when people who think the stock will continue lower, shorts or bears, they place their bearish bets. They bought puts, for example, and they had to put their stop somewhere. So usually they put their stop above the previous highs. So if they put their stops above the previous July highs, and now we're making new highs, they need to cover their shorts. And covering their shorts means buying. They need to buy in an open market to cover their short position. If they're buying an open market, that means that the price will continue higher. Okay. So a short squeeze could unfold probably now. We're about to unfold it, I think. Okay, and here's an actual trade by one of the subscribers. Now, this subscriber trades options, and he trades relatively short-term options. So, for example, this is Travelers Companies, Travelers Insurance, pretty large, cap company. It was bearish. So notice right here where I'm hovering, it says on the 12th of October, we closed below this yellow line. So at this point, we would probably just want to do nothing with this stock. However, a few weeks to a few months later, the stock has started to move higher. And notice that where I'm hovering on this November 27th, it closed above my blue support resistance line. Again, you can find out more about them and get the same lines on your chart if you have a free TradingView account. So, what did he do? I sent an alert. I'm going to show you an actual alert. This is an actual alert sent to my subscribers. Notice it was published on November 30th at 11 a.m. California time. Notice where I'm hovering. That's the actual publication. It was sent to my subscribers. Now I, by the way, have a Telegram channel as well for subscribers only. So I send this out to my subscribers. So the alert was sent at about $180. So there it is on the 19th, I'm sorry, on the 30th of November, alert was sent. Here's what the subscriber did. He bought, on the day of my alert, he bought January 19, 2024, so in a few weeks, expiring 185, so $185 strike price. So right about at the money. He bought it at the money. And they cost $2.35. Calls. He bought calls on the day of my alert, which was on the 30th of November. Each call cost $2.35. So the way options are traded, you need to multiply by 100. So each contract would have cost him $235. Let's say he bought, I don't know, 10 of them. So $235 plus 2 zeros, that's let me see, 235 plus 2, so it's $23,500, right? Let's say, I don't know exactly how many contracts he bought, but let's say he even bought, let's say, one contract. Each contract was $235. Notice that 3 days later, he sold them at $3.60 each, and that's a 53% profit in just 3 days. So this move was 2% for the stock, around 2% or so. However, the option moved 53%, so about more than 10 times, right? So that's basically how we trade options, is that we try to buy on during the actual alert. We don't need the option to move that much. We just need it to move pretty quickly. Now, here is $1 million question. There is no way that I'm aware of is to find out if the option would move quickly, or if the option would not move quickly, or if the stock would move immediately in our favor, or it will just like do something for a while and then finally move to our target. So if you're trading options, you will know that there is something called theta, Greek Theta, theta meaning time. And if by the time we have our January, for example, expiration time, in this case January 19th, if by then the price is somewhere below our strike price, then our option will be worthless. But in this case, it moved quickly in our favor, and this is exactly what we want to do for options. In this case, we moved very quickly. The subscriber booked 53% profit, just sold the options, and now sitting in cash. So congratulations. See how quickly sometimes, and you really don't need a big move. We just need a few percentage points move. So again, congratulations if you took this trade. All right, let's move on to Forex Universe and gold. Here's dollar currency index, DXY. So last week I pointed out that dollar has, well, first of all, dollar, I think, is now in an uptrend. The reason why I'm saying it is because we closed above this blue support resistance line right there on the 26th of October. And this is really all I need to know about a security to make a decision. Are we in an uptrend or downtrend? We were in a downtrend, a while back here. But now we're definitely in an uptrend. However, we got a nasty looking pullback that so far has culminated on the 29th of November. Let's zoom in on that action. So notice what's happening here. Notice how the stock, in this case DXY, dollar currency index, pulled back exactly to this red line and stopped there, and then rallied. So in my mind, this is good news, because so far the red line has acted as support, and if it did not hold, and we broke below it, then we will definitely say that we're no longer in an uptrend, we're now in a downtrend, so whipsaw. But so far, no whipsaw. So we're moving higher. If we close above the blue line again, I think it would be very good for the dollar. So right now, we're stuck between those two lines. If we move lower and close below 102.49, then we're in a downtrend. If we continue slightly higher, then we will reaffirm our uptrend. All of this have put an additional volatility on gold. So currently we're looking at gold XAU USD. So the bottom part of this equation, USD, has been getting bigger since 29th of November into December here. So notice what happened. Even though initially we went higher, and in fact these are all-time highs. On the 4th of December here, we had a big spike into all-time highs and followed by a move lower. So I'm just going to turn off the indicators for a second. Notice the size of this candle on the 4th of December. Also notice the way it looks. This is a pretty classic shooting star candlestick or a falling star candlestick. Very large tail out of the top, which signifies that during the day, the stock, the bulls or the people who think the security will go higher, tried to push the prices higher, but the bears, who think that the price should be lower, completely undid their work. Okay, and then followed up and closed next to the end of the session. So overall, this is quite a bearish looking candle. We can also look at the weekly time frame, and we will see that even is looking even worse. So this is a weekly candlestick, same kind of looking shape, very toppy looking candlestick. Looks like it's been prices being rejected at higher prices. And then finally today, notice that we broke below this blue support resistance line. Now, as of right now, notice that blue line has provided us with good entry opportunities, all right? But right now, because of the way this candlestick on the December 4th looks like, and the way the dollar is acting, if the dollar moves even a little bit higher, I think the bulls will jump in and start buying it. This would mean that gold might be in a world of pain, all right? So can we re-challenge the highs for gold? Sure. But I don't know about this candle. It just looks kind of bad to me. So what do you guys think? Make a comment. Do you find gold may have been rejected at higher prices and we're about to turn around? Is this a sign of a top-in pattern or a turn around for the from an uptrend into a downtrend? So make a comment, see what you guys think as well about any of the other securities I mentioned. And then head over to MasterChartsTrading.com, click on sign up for one of the products. So again, I have the trading indicators. You can see them on this chart. There's a green, blue, red, and yellow line. They're available for TradingView.com. You need a free TradingView account, and once you sign up on TradingView.com, go to MasterCharts Trading, sign up on my site. I will open the door for you. You should be able to display the indicators on your chart. It sounds convoluted, but actually it's quite simple, and I can explain. If you need help, just contact me. Newsletters are, I send out basically daily alerts about various securities, as well as weekly members-only video. And so, for example, this week I sent out, very recently I sent out Travelers, and at least one of the subscribers was able to book a 53% gain using options trade from my alert. And of course, the best deal is to get both trading indicators and newsletters. So sign up for that at $59.95 per month. I think it's a great deal. If you need the yearly subscriptions, just send me a message. I haven't been able to add them in, so send me a message and I'll be able to accommodate the yearly subscriptions. That's it for this week's recap. Again, thank you for watching and have another great trading week. Don't forget to hit the like button. Bye-bye.